Okay, peeps, welcome back. So today we're going to be going over Bitcoin versus the Fed funds rate getting cut and the uninversion of the yield curve. So with that being said, let's get it. Okay, so this is situation specific. Okay, this is very unique. We're getting ready to have the Fed's getting ready to cut rates. Okay, we have not seen this since basically the last time we saw them cut rates, as you guys can see, was starting back in July of 2019. And that was going into a pandemic. So that was a nightmarish, pandemic, black swan kind of event. That was a very rare situation. Stuff like that usually doesn't happen. The Fed doesn't usually have to cut rates and print trillions of dollars because of some freak accident that nobody could have predicted. So it's been a long time since the Fed cut rates. So in my mind, I would think since it's been years, it's been years since the Feds had really anything cheap in terms of borrowing rates. You guys can see, I mean, even at the 3% range here on the Fed funds rate, this was all the way back in September of 2022. So this was 2 years ago. Okay. Markets are predicting by the end of the year that we're going to be back at like that 4% range. Even still, if you talk about that, that's going all the way back to, December of 2022. So that's almost roughly about 2 years ago, just for that small drop there. So this is actually a really big deal. But the reason why I'm talking about this specifically is because, again, the crypto bull run usually starts right around the end of the halving year. And funnily enough, we have the Fed cutting rates and the elections all happening around the end of this year. Okay, the Fed's supposed to cut rates this month, elections in 2 months. And then we also have the global liquidity index that I showed you guys before. That basically says we're not supposed to get a topping out of the global liquidity index until right around 2026. And on top of that, the yearly candles on Bitcoin, and I've showed you guys this countless times. Usually we have 3 green years and then we have a red year. Okay. And the red years always fall on even number years, which based on history would have been 2018, 2022, and then theoretically should be also 2026. So anyways, let's go ahead and go over the historical data here and talk about what has actually happened throughout history. Okay. So we're going to talk about the cuts first, and then we'll take a look at the hikes. I actually wasn't going to talk about the hikes in this video, but I do think it's important to talk about the cuts first. So based on what you guys can see here in 2019, of course, the pandemic flash crash didn't actually start at this time, but it didn't happen until right around that, I'd say, beginning of 2020 to roughly about April, March of 2020 is when we saw the Fed really freak out and start to really slam rates down to the floor. So we had a very minor recession, 2-month recession, 2-month sell-off. It was a brutal sell-off, by the way. I experienced it myself, so I know the pain of that 40% dump in stocks. And then, boom, right around the time that it was supposed to take off, Bitcoin took off in October to December of the halving year and then ripped to new all-time highs. But the point I want to make here is that when the Fed did cut rates, the price of Bitcoin did actually pull back. Okay. So it basically went from right about the time that the Fed was cutting rates to right about the time that they stopped cutting rates. Bitcoin went down a massive, absolutely massive 72%. Okay. It had a 72% drop from roughly about 14,000 all the way down to 4,000 in less than a year, and then still went on a bull run after that. But the thing I want to point out here is we are seeing kind of a similar formation here between 2020 and 2024. If you guys can see here, we have a very similar kind of looking chart. The only difference is Bitcoin did not already hit all-time highs when this happened. Okay, so it was at bear market lows or pretty close to it from the 2017 peak, and then we kind of got this flag-looking pattern. Again, you guys can either look at this as a bullish flag, a bull flag, which is generally speaking, when it breaks out, it goes to the upside, or a descending channel. Either way, it's a bullish pattern, doesn't matter. And what happened afterwards, boom, Bitcoin ripped to the moon. So, kind of the thesis here is that when the Fed cut, Bitcoin initially went down significantly. Okay. Now, do I think this thing goes down 70% from the previous peak after the rate cuts? Yeah, I don't think so. I don't think that's likely. That would put us down at $20,000 Bitcoin. We would have to assume a lot here. We would have to assume that the rate cuts are going to zero in 6 to 8 months from where they are currently. I don't think that's likely. Again, that was a unique situation. That was a black swan event. This is not a black swan event. This is just the Fed reversing the rate hikes at a slow and effective pace to basically engineer a soft landing. Again, the markets are only expecting a quarter basis point cut. And in my opinion, if the Fed was going to do any kind of emergency cut, they would have already done it before the FOMC meeting. I am not expecting the Fed to do an emergency cut. I expect the Fed to wait until September 18th and come out, and Jerome Powell is basically going to be like, oh, yeah, guys, we're going to cut by a quarter basis point today. Ha ha, congratulations. We're all going to share in the dividends, right? So that's kind of what I'm expecting to happen. Now, it's possible Bitcoin could pull back a little bit into the Fed rate cuts. But if I'm being completely honest, y'all, I think, we had a flash crash last month, and I think that the markets are going to go bullish on the Fed rate cuts because, again, you guys got to understand the psychology of the markets, okay? If the markets interpret the Fed rate cuts as, oh, we're just going back to monetary easing, that's a good thing, okay? If the Fed can manage to do that without blowing up the economy, then the markets are going to see that as good news. Okay, if the markets interpret it that's basically good news, then in theory, Bitcoin should go to new all-time highs into the end of the year. Again, we saw the same formation back here. So we saw that bull flag descending channel, and boom, Bitcoin snapped out of it right around the appointed time. Well, actually, it was early in the halving year, but regardless, the channel did break out to the upside. We even had what could be considered like another bull flag right here between right about 9,000 to 12,000, and then it shot to the upside towards the end of the halving year. So this could just be a very similar situation, okay, where the Fed gets ready to cut rates and then crypto moonshots between October to December. Again, I don't think Bitcoin's going down 70% because the timing of the cycle would just be off for that, okay? I consider the left translated cycle theory, but the problem with that is that we've seen a pullback in time that's lasted nearly 6 months at this point, okay? If crypto was going to go into a bear market, it would have, in my opinion, I could be wrong about this, okay, but I give this a 90% or 10% probability. If Bitcoin was going to go into a bear market, it would have done so much faster than a 6-month time frame, okay? You guys can see when Bitcoin topped out here, it only took 2 months for it to slam down 50% in the mid-cycle dump, okay? And when Bitcoin topped out here on the month of October, it immediately reversed, went down, and within 2 months, okay, I'm going to show you guys this. So you can see the pattern here. 2 months from the first red candle to the second one, 54% drop. Again, 2 months from the first red candle to the second red candle, not quite as big of a drop, but 40%. Over the course of 3 months, 52% down. This thing has been chopping sideways for 1, 2, 3, 4, 5, 6, going on 7 candles now. Okay. If we're counting the first red candle, that would be considered 6 months. So 1, 2, 3, 4, 5, 6 months. And as of right now, Bitcoin has only gone down roughly about 20%. So I'm thinking likely that even if the Fed cuts rates, this thing is going to probably still snap to the upside. Okay. There is another theory as to why I think this is going to happen. It's not just because the cycle timing and the global liquidity index and the fact that Bitcoin only has one bear market year every 4-year cycle. Okay, and I can show you guys this right now. Usually I wouldn't talk about this, but I do feel like it's relevant because we have the Fed rate cuts coming, and last time the Fed did cut rates, Bitcoin did fall off a cliff. But again, that was because the market was interpreting the Fed rate cuts as bad news. Okay. There was a pandemic. The world was coming to an end. The Fed had to cut rates to stimulate the economy because people were getting laid off in mass because of a pandemic that nobody could predict or control. Okay. It was a whole different story. This time it's just simply if the Fed cuts rates and they manage to keep the economy afloat while they're cutting rates, and they do that nice, easing, slowly seamless transition back into monetary and global GDP expansion, then everything should be fine. Markets should go up. Okay. But 12-month time frame here, you can see 1, 2, 3 bull market years. 2022, we had a bear market year. 2 years of bull market so far. We should have a third one next year, and then the bear market year in 2026. Again, I'll go back even further here. So bear market year 2014, 2015, 2016, 2017 bull market year. Final year 2017, 2018 bear market year. So you guys can see the point I'm making here. Okay. And we will talk about we will talk about the inversion of the yield curve versus these two assets in a separate video. So we'll talk about Bitcoin here and also the SPX. We're not going to go over any other charts, just these two, but we'll do this and then also compare this to the inversion of the yield curve to show you guys kind of what history says is generally speaking going to happen. Okay. So I want to go back a little bit in time here to take a look at the previous major bear market we had. Okay. And when I say major, I mean like, markets are freaking out. They're like, oh God, the Fed's cutting rates. We're all gonna be wrecked, all that kind of stuff, right? The market's interpreting the Fed rate cuts as bad news, like I said. And hold on a second, let me go back here further. I think I was actually off a little bit about this. Okay, so you guys can see as the Fed was raising rates from 2004 to 2006, and they held rates at all-time highs until 2007. What happened? The markets, generally speaking, went up as the Fed was raising rates. As soon as they started cutting, the markets hesitated and then dropped off a cliff as they cut. Okay. But again, this was a bad news situation. And if I go over here to 2020, you guys can see basically as the Fed was raising rates, what did the markets do? It went up. Okay. And as soon as they cut rates, well, actually, even before they cut rates, the markets were still going up as they were cutting rates. But I want you guys to notice the difference here. Okay. In June of 2019, the pandemic wasn't really a conversation piece. Okay. It really wasn't, to be honest. The markets didn't really start talking about the C virus until roughly about the start of 2020. Okay. And it got really bad in March. So you guys can see, even as the Fed was cutting rates, the market still went up. Okay. It was only when it became evident that this whole pandemic thing was not going away, that the Fed was now going to have to cut rates because there was an emergency global pandemic, that the market saw things as bad news. And that's when the market started capitulating. Okay. So you can see they cut rates here, no bad news, market still went up. And then all of a sudden, bad news, and the Fed had to slam rates to the floor. And then what happened? Massive dump. Okay. Here's what's unique about this situation, and we've talked about this countless times in previous videos. The Fed came out here in November and said that they were going to hike rates. What happened? Immediately, the markets went into sell-off mode, okay? And they sold off until basically the Fed was, it looks like, roughly about halfway through hiking the rates, okay? And it would appear, at the surface at least, as soon as the market started to realize the Fed was slowing down the rate hikes and they were getting ready to pause, the markets went up again. Okay. Now, I will argue that I think that this move up from the bear market lows is pretty aggressive. Okay. We could see some corrections along the way, but any major bear market dump, I don't think so. Again, because historically speaking, when the Fed hikes rates, markets usually go up. And when they cut rates, markets go down if it's a bad news situation. Okay. In this particular instance, the Fed said that they were going to raise rates at a more aggressive pace than they've done in a very long time. The markets didn't like that. They saw that as a bad news situation, so the market sold off, okay? Which again goes contrary to the historical norm. So in this situation, because assuming that the Fed is going to ease us back into monetary easing without causing a recession or an economic collapse, I do suspect as the Fed cuts rates that we will continue to go up, okay? It's possible we may have some pullbacks along the way, but I don't think those pullbacks are going to be too extreme. I mean, might see something like basically what we've already seen um, throughout the bull markets that we've had. Okay, so we had this flash crash here. That was kind of the crash for basically around this bearish seasonality. Then we might have a little bit more drawdown and then go up into the end of the year. We kind of had this pullback in March, April timeframe, pullback last year for a few months during August to October. We might see some stuff like that. That's normal in bear market years. Okay. So this is basically comparing the historical price of Bitcoin, price performance of Bitcoin, and the S&P 500 against the Fed cutting rates and hiking rates. So I hope this helps in some way. Hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.